How are you?
I'm doing well. How's everything with you?
Doing okay, doing okay.
Yeah, we've had quite the 4 days since Unpause. I think we'll have a lot to unpack and discuss in this class.
Let's get to it.
All right. We already have some questions in the town hall, but everyone else in the audience, if you have any questions, whether you're new to Beanstalk or you want to discuss anything Beanstalk related, drop it in the town hall chat. Publius, before taking questions, I wanted to maybe dedicate some time just to discuss, the overall performance of the protocol in the past 4 days. We've had a lot of discussions before unpausing, and we were thinking about all of the scenarios or all of these things that would happen. And in the past 4 days, we saw the protocol, performing. We've unpaused at a price of Bean, which was slightly above $1. We've had the ramp up period on how Beanstalk was minting. We stabilized to $1. Today, maybe we had some sort of a mini, let's say, debt issuance or so, and brought it back. We've seen the field come in action, play in action, at let's say rates or pod rates that we've unseen before. And then lastly, we've seen the barn also in action, seamlessly integrated within the protocol, even though this whole barn raise idea is, a new concept or something new in Beanstalk. What are your thoughts on the overall 4 days? What did you see? What behaved as expected? What was interesting to you?
Well, you did a really wonderful job of summarizing the past 4 days. The most interesting question on our minds prior to the replant was about the interplay between fertilizer and the pods, and the question around, given the uniqueness of the two different debt issuances and their different interest rates, how they would affect, or what demand would look like for each of them after replant. And in particular, how demand for too much fertilizer compared to pods or soil perhaps could hurt Beanstalk's ability to maintain the peg, because demand for fertilizer doesn't result in the purchasing of beans, whereas demand for soil does. So, as you noted, it was very encouraging to see, particularly over the past day, or less than a day, really, there be a significant amount of demand for soil, and Beanstalk be able to borrow enough beans from the market in order to return the bean price to $1, and that is very important. So beyond that, it was interesting to watch the liquidity very quickly grow from the 28 million or so that was deployed to 38 million. Now it's settled down at 36 million. But that was another interesting thing to watch. Over time, hopefully in the next couple of days and weeks, there will be a lot more helpful data that will be available to analyze. And the reality is that this is still a very early days post replant, and there's a lot more that needs to play out in the market. But it was certainly interesting and encouraging the way that Beanstalk, between convert and demand for soil, was able to incentivize the return to the peg, both when the price was too high and when the price was too low. And this is despite the minting schedule for Delta B continuing to ramp up. So the fact that there isn't a 100% Delta B yet, I think that will start tomorrow. The concept is that even at 75% today, Beanstalk in its slow and steady fashion can return the price to the peg. Now, there's lots of interesting things to observe in the protocol, and from an incentive perspective, some of the things that are new are that the withdrawal freezes now the end of the current season. And thinking out loud, about the effectiveness or the efficiency of the soil market, the ability to see that there is soil going to be available at the top of the sunrise and be able to withdraw beans from the silo into the top of the sunrise and then immediately sow, assuming that you have the ability to sow faster than the rest of the demand for soil. There's a question about efficiency there in terms of maybe it's better for there to be a one season freeze such that you have ambiguity if you're withdrawing whether there will be soil the following season. That's one potential efficiency to be gained in terms of making sure that soil is consumed in a way that beanstalk isn't both. The real goal of soil is to ensure that there's demand for beans, right? So people are buying the beans in order to lend to beanstalk. On the one hand, there's not if people are going to withdraw their beans from the silo and sell them, then beanstalk will need to incentivize enough demand for soil in order to clear all of that extra supply in theory. But the real question is around at the margin what happens. So with regards to whether or not the market for soil is more efficient or less efficient as a result, just another thing to watch. The goal is obviously to remove the withdrawal freeze entirely, and therefore that sort of settles the ultimate question here. But it's just another data point worth watching in terms of how many beans from the silo are withdrawn to then be immediately sown. That's just another data point to watch because at the margin, unless the beans were going to be sold, beanstalk would prefer for them to be left in the silo. The incentive to do this will probably decrease over time as more grown stock accrues, but particularly with the earned beans, there's always going to be that incentive because of the low amount of grown stock on top of it, or the lack of grown stock. So nothing really to do about that per se, but just talking out loud about some things that have been observed. And other than that, pretty excited about the peg crosses thus far. It's worth noting that because the price is no longer derived from the bean ETH pool, that the amount of peg crosses is likely to be lower, given that there used to be lots of peg crosses just from minor ETH volatility. So if the price was within a couple bips of the peg, you could have multiple crosses without any trades in the bean pool because of volatility in the USDC ETH pool, whereas that's less likely to occur given the structure of the Bean3 curve pool. So perhaps less crosses, but this just means that collectively as a community we'll need to develop more sophisticated ways to evaluate deviations from the peg. So perhaps a historical delta B or something like that, which will better capture the volatility of the bean price. So lots of different things to think about as we move forward, but those are just some opening thoughts.
Okay, let's talk a little bit about the field and its ability, let's say, to create demand for beans through soil. The field is at a pod rate of close to 2,500, the highest we've seen it at. And when we started at even 3,000%. We've seen that drop quite quickly at the beginning, and then it slightly went up as it attracted soil again. At this very high rate, we're seeing it. We're seeing encouraging ability for it to continue to attract demand. What depth is too high? When is it too high? What do you think is what decides that now is a lot? Why can't we go to 10,000%, 20,000%?
Well, this is sort of the ultimate question, and at the end of the day, there's nothing that says that an infinite pod rate isn't acceptable. Just look at the rest of the implementations of fiat currencies at the moment, where it seems like there's no amount of debt that the people that are running the monetary system are concerned about. It's hard to know what the debt level is that would cause or will cause the implosion of a fiat currency. So one, one thing, and really just thinking out loud here, one of the things that I heard recently on a podcast was that what ultimately leads to hyperinflation is that the average maturity of government debt approaches zero. And in practice, the only way for the government to roll over the debt is to roll it over with a shorter maturity. And the result is that over time, all of the government issued debt trends towards having a maturity that is immediate. And government debt with maturity compared to government issued fiat currency, they're effectively equivalent. And so at the point where the maturity approaches zero, you have immediate onset hyperinflation because now all of the government issued debt becomes the exact same as the currency. In the case of Beanstalk, that would be like if all of the pods suddenly became beans because of Beanstalk's inability to, in a cost effective fashion, roll over the pod. Now, the fact that pods are zero coupon bonds without a fixed expiry, and there's no date at which Beanstalk is required to pay them back, perhaps means that Beanstalk has a little more leeway in terms of how far out the debt level can run, because there's never any promise or guaranteed increase of the supply at any given time. And so therefore Beanstalk can afford to be slower and steadier in its adjustments to the temperature because it doesn't have any sort of overhanging debt that at some point it needs to roll over. So that's just one thing to consider in all of this. That's obviously not an answer as to what pod rate is too high. We saw, and I think what we continue to see is very encouraging, where you had this artificial increase of the pod rate as a result of the attack or the exploit. The fact that Beanstalk continued to issue debt throughout the barn raise demonstrated that the protocol was still viewed as credit worthy to some extent, but ultimately the debt level of the system was undefined during the barn raise because it was unclear how much what the bean supply would be at the time of the replant. Whereas now it's very clear what the pod rate is, and it's a multiple of the maximum prior, close to it. I think it peaked at Beanstalk replanted at a 3,000% pod rate, which was just under double the maximum pod rate prior. Now Beanstalk has a 2,400%, so about 50% higher than the maximum prior. So it's unclear what the maximum pod rate that Beanstalk can sustain is. Perhaps the more interesting question is what's the temperature that Beanstalk can sustain? Because a high temperature is really what causes the pod rate to run away. And as we've started to observe already, despite the fact that the market isn't fully up and running from a UI perspective, so it's hard to see the curve, there has been a significant amount of demand for pods at the end of the pod line at I think that there was demand today at 3.5 cents, which implies a significantly lower necessary temperature in order to clear the soil than there currently is. So one of the things that we've been thinking about is perhaps how to try to incorporate some of the data from the pod marketplace into the temperature such that Beanstalk is approaching the optimal temperature implied by the secondary market in order to clear the soil, perhaps with some additional premium to ensure that the soil clears. Now, the other observation to be made on the temperature is that it's okay, in theory, for the temperature to have reflexivity downward. The problem, as has been discussed many times, is reflexivity upward. If you have the temperature that can explode upward, that's how in a very short period of time you can have a runaway debt situation. So Beanstalk needs to raise the temperature slowly at the expense of being downside price volatility. So Beanstalk is willing to trade off short-term downside bean price volatility in order to not have the pod rate become overly excessive. But at the end of the day, it is probably acceptable for Beanstalk to have a temperature with downside reflexivity, where the pod rate can come down faster than it currently is, because that is unlikely to hurt the incentive structure around lending to the protocol in an efficient fashion. But again, at the trade-off of perhaps additional bean price volatility. So that's something to consider. But given that the goal of the protocol is to ensure its credit worthiness, perhaps having some sort of downside reflexivity in the temperature might be helpful for the long-term sustainability of the model.
I agree. Especially there were at some points where the soil wasn't let's say sold immediately, or it took it a few more minutes. Of course, still great, but maybe with a lower temperature, it could have waited maybe an hour or slightly longer. So it would save the protocol maybe on that, but as you said, comes with a little bit more of price volatility that are in it. This was a question I was going to ask later, but maybe since we were already talking about it, we might bring it up now. And it's a discussion that has been in the economics channel, and I think it's a build-up on an idea that we discussed some time ago, which was a bidding system for soil. When soil is like selling out. I think more or less the idea is currently the same. Maybe there are more details on how to run this auction. I would say I'll just say the current one, because I think you always remember the one before. So the thinking is, or what the guys are thinking is, and I'm summarizing the chat on the channel, is in the first 5 minutes there will be a linear auction where the temperature will go from 0 all the way to the current temperature, and then the first person to bid for the soil gets the soil. After 5 minutes, it continues as usual. What do you think about that?
That's very interesting. In theory, that wouldn't really be bids on the demand for soil as much as it would just be having the temperature ramp up each season from 0. Having bids where you have people locking things up in advance at a certain rate, that's a little bit that's a separate question, I think, from whether or not to have the temperature ramp up at the beginning of each season. Now, whether people want to have bots that are there ready to bid for the soil at the right price, that's a separate question. Like how to structure it at the contract level is different than whether to have the temperature ramp up. In theory, first response, I haven't been following the acronym closely over the past couple of days, but this seems like a very fine idea in order to minimize the temperature that Beanstalk is paying. But still, in general, not a fan of bids for soil where people are locking up assets in advance, because that starts to function as some sort of reserve that can be depleted. Now, to some extent, maybe it's not that big of a reserve, given that it's just a more efficient for soil, where then Beanstalk can clear things perhaps in a lower fee fashion. But the goal for the moment is to ensure the most efficient market for soil, and it's unclear that taking bids in advance would create that. Whereas I think the scaling of the temperature seems like a great idea.
Okay. The channel or the discussion moved to a thread that's under governance, so it will be called under new mechanism for soil distribution. I think, if I'm not mistaken, it's Quasimat who's leading the conversation there. All right. Another question about what we saw happen, I think yesterday, with the sanctions on Tornado Cash, and now the whole talk about decentralization. And I wanted to think or talk a little bit about it here, and not from politics or what's right and wrong, and more about on it from an economics perspective, and think about censorship and the idea of an economy that has censoring in it, versus one that is free and has no friction of that source in it. Do you think just from an economics perspective, an economy can flourish that has blacklisting risk in it that reduces let's say the security or the stability of that market?
One of the reasons that, and it's specified in the white paper around the creation of Beanstalk, is that using all of the primitives that exist at the moment is totally impractical if the currency that you're using is centralized and censorable. Why pay the premium to run on permissionless censorship resistant primitives if you've got a weakest link in your chain that is highly censorable? It simply doesn't make sense. And in addition to the non-competitive carrying costs plaguing DeFi, the threat of censorship is constantly a threat. And I think in general, we as a community need to have the attitude that this is expected, right? That censorship is a given, that we are living in a time where freedom of speech is not valued and privacy is not valued. The First Amendment is not valued. And that's a real shame. And we need to raise our voices very clearly and advocate for right to privacy and right to free speech. And I think if anyone, all of the assets that were stolen from Beanstalk were immediately sent to Tornado Cash. So we, we, like all of you, have felt the pain of staring at Tornado Cash and thinking, what the fuck? And this, this is horrible, right? Like, this is brutal. But at the end of the day, the censorship of the GitHubs of the contributors to Tornado Cash, that's awful. It's awful. But at the same time, we as a community need to recognize that the shit we're working on is not viewed as friendly, and the censorship should be the expectation. So this isn't surprising. It's horrible. It's horrible, but it's not surprising. So we need to collectively all take a stand for open source code, for our right to publish open source code, and this is a major important issue, and I think it's really important that we as a community all join together on this. That censorship is not the assault on privacy is none of this is acceptable to us.
And I agree, of course, that good politics bring good economics or a good economy, and the opposite is true. But if we were to think of this just from pure, economics perspective or a business perspective, someone who doesn't really care whether this is right or wrong, wouldn't having censorship just by default being able there in an economy would not, would restrict it, and one that is not would thrive, because that removes the friction of someone having just to worry about, what's going on or what's happening here. This restriction that you're implying in there from an just a pure economics perspective isn't good.
I'm not sure I fully understand your question, but the point is that all of this tech that we're working on is useless if it has a least common denominator that is censorable. So you can have permissionless layers, but if there's one key cog in the wheel that is censorable, then none of it is censorship resistant. So that's the lesson, and how that plays out at an economic level, social level is quite clear. If this tech at every layer isn't permissionless, or you have a way to make it permissionless, then it's going to be censored, and we all need to act accordingly.
Okay. With that, maybe we can answer one of the questions, which is when is the best timeline for the BeanETH pool? I think the answer to that is still the same, which is end of this month or early Q4. And Correct me if I'm wrong, Publius.
Well, don't forget September. Don't forget September. So we're still at the beginning of Q3, or the middle of Q3 here. There's August and September to go.
Right.
I think everyone agrees that the Bean ETH pool is a very high priority, if not the top priority, and therefore the hope is to be able to implement that as soon as possible. A couple weeks is probably too short. A couple months is probably too long. So the hope is to get the first substantive BIP, which would be the Bean ETH pool, live in the not too distant future. Hard to give an exact date, but it's also, we're saying this would be implemented within Beanstalk as a market pool. So this wouldn't be a Uniswap pool. This would be a feeless Beanstalk native pool.
Okay, and then the follow-up to that question is, who are the next candidates, or what are the next candidates after Bean ETH?
From a liquidity perspective?
Yes. What would the next whitelisted asset be?
LUSD is, I think we look back on the LUSD whitelisting quite proudly. LUSD is a wonderful primitive, which is rent-free and decentralized and permissionless and immutable, and has demonstrated incredible efficacy over the past couple of months with all of this ETH downside volatility. It's performed quite wonderfully. So as we've discussed, LUSD doesn't hold a hard peg at $1, which doesn't make it a good target to use for minting for Delta B, but it is an interesting option for people to use for providing liquidity against Beans, perhaps if they want leveraged exposure to Ethereum while they're providing liquidity to Beans. And LUSD seems like a great option, but frankly, haven't thought about that too much. So that's just thinking out loud.
All right. Justabin asks, what do we think about Beanstalk pursuing immutability? Is this something that's planned, and maybe even something that can be achieved?
It's a great question. Not sure, to be honest. As we've discussed, diamonds, as they're currently constructed, don't really support immutability or partial immutability. Now, from a theoretical perspective, there's certainly parts of the protocol that at some point should become probably, if not immutable in practice, immutable in theory, immutable in practice, if that makes sense. So even if it's not at the smart contract level that it can be made immutable, from a DAO perspective, perhaps things become off the table to amend. Now, at the same time, hard to envision Beanstalk reaching that point in the next couple of years, 1 to 2 years. I feel like there's still a lot of data that will come in, and particularly at scale, new information that can be used to further hone and refine the model. And we're big believers in the mantra of good, better, best. And that means that even if something's good, it can always be made better. And the goal is to make it as best as possible, but it can probably always be made better, and we'll never reach the best possible point. Now, how to evaluate the trade-off of the Lindy effect of having a contract that is immutable and hasn't changed in a very long time with the marginal improvements that can be made, well, it's a question of how marginal is the improvement, right? So at the moment, it's very clear that there are a lot of improvements that are worth making, instead of making it such that the protocol can't be changed. But I think from an ethos perspective, it's hard to argue against the value of immutability, and therefore it's something that we should constantly keep in mind collectively as we continue to build and iterate on Beanstalk over the next years. But that's not something that seems realistic in the immediate future.
Okay. Xsalad has some questions. The first one is, what is the strategy or thinking in changing Delta B, to impact minting? I think there is no strategy here. It's always just a shortage that will be minted. So maybe there has been a few discussions of if we tweak the algorithm in one way, we can, mint more or create more minting. Publius, can you summarize why does Beanstalk mint? What is the idea
Yeah,
behind it?
Beanstalk doesn't really care about how much it mints. What it cares about is returning the bean price to $1. And so perhaps when the price is too high, you can increase the bean supply by a multiple of delta B, because most of the people that are receiving the beans intend to hold them for a very long time. But at the same time, Beanstalk can never know that. Can never know what amount of beans that it's being minted are going to be sold, or at what price they would be sold, or when they would be sold, under what conditions they would be sold. And therefore, Beanstalk has to act ignorantly. Now, adding a multiplier to delta B to increase the minting of beans or soil, that seems to be a much worse idea than adding a multiplier to decrease the amount of beans and soil that are minted, which would in effect limit Beanstalk's ability to return the bean price to its peg quickly via minting of beans for soil. So again, trading off volatility at the expense of ensuring that it's not overissuing pods or overissuing beans that at some point would cause additional downside volatility. So hard to imagine Beanstalk becoming more efficient by minting more beans and more soil. So the goal is not to optimize making sure that there's lots of slaps. To be perfectly candid, the goal is to optimize around a stable bean price with relatively low volatility and frequent peg crosses, and a sustainable pod rate.
All right, and Exceled also asks if we can make this class, more European time friendly. If others also feel the same way, please let us know, and we will take that into consideration.
Okay, and is that earlier or later? I have no idea. So
I think it will be early, so maybe sometime around the same time that we do the DAO meeting.
Whatever works. We're happy to show up whenever it's most convenient for everyone.
Appreciate that. Harry Smith asks that he would like to understand what is the relationship between the Beanstalk contributors and then Root. And he mentioned an example in the I think the Beansprout proposal that one of the contributors is going to be paid while they also work for full time for Root. So where do you think is the line drawn? What are the same things that are shared? I'm not sure if in Publius you want to answer that question. I'm happy to give my opinion, and I may also allow Mr. Manifold to answer.
Well, I think this is a fabulous question, and it's an important discussion for us to all be on the same page about. At least from our perspective, a successful and healthy Beanstalk economy and ecosystem is going to come from a very healthy mix of public and private contributions to Beanstalk. So, from our perspective, lots of contributors to Beanstalk that are public contributors, either to the code itself, to the front end, to managing certain things within the DAO. The hope is for all of them to find businesses that they can build and develop on top of Beanstalk that are ultimately going to replace or can be done in conjunction with their roles within the DAO or within Beanstalk Farms or Beansprout. So, if anything, I think we should all encourage the development of the most economic activity possible on top of Beanstalk. And I think we can all agree, if the goal is for there to be real businesses running on top of Beanstalk, that's not best to be done exclusively in public settings. So the goal is for, I think, as a community, we should encourage entrepreneurial spirit, and we should encourage people to be capitalistic here. And one of the goals, I think one of the economic principles specified in the white paper is that incentives determine behavior. And at the end of the day, Beanstalk has to succeed in an environment where there's lots of individuals looking to make as much money off of Beanstalk as possible. In fact, the incentives of Beanstalk are assuming that that is what people are doing. So from an ethos perspective, I think we can all try to figure out what can we do to build real businesses on top of Beanstalk and how can that contribute. Over time, perhaps contributors feel like they are not able to do both or do multiple things. It's, I mean, just speaking personally, in the case of Mr. Manifold, I think that the amount of time that they continue to put into developing additional things related to Beanstalk, whether you can say that's part of Beansprout or in their private capacity, if they end up raising capital for additional private ventures, it's a very interesting line that we're all learning about as we all kind of work in a decentralized public setting, but also have private capacities here. And I don't know what the right answer is here. I think you say that you think disclosures here are very important. I think I would agree that that the people that are to some extent the people that are contributing to the DAO, it's important that they disclose that they have other interests related to Beanstalk that may not be directly aligned with the DAO, but at the same time, again, the whole point of Beanstalk's incentives are such that individual private interests looking to profit maximize should ultimately be aligned with Beanstalk. So, what's the right level of transparency and privacy here is an open question, and I think we can all. The best way forward is for us to ask questions and continue to try to be as open with one another as possible about what we're all doing. And some people may want to share more than others about what are their private ventures. But the goal is to nonetheless encourage contribution to things in a public capacity, even if there's things happening in private capacity as well.
And I can maybe share some thoughts as a community member, and then also as a member, of the Beanstalk Farms committee. Maybe when initially Beanstalk started, it was almost that everyone was a part-time contributor, and everyone was working, somewhere else or elsewhere, and they still all contributed to Beanstalk. And I think the measurement here is not if you're doing other things or if you're contributing elsewhere, because I believe, in the future we will still have contributors who do, contribute and have other things to work on it as well. The measurement is always, what are you contributing to Beanstalk? And in the Mr. Manifold example, even Root, the incentives of Root are completely and directly aligned with Beanstalk. But let's say they were even separate, you can clearly see the contributions just to Beanstalk itself and outside of it. Whether contributors want to say that or not, I agree, and I think the DAO will collectively come to agree or decide if they always want to know for people who contribute to the DAO to disclose who else are they working to. But I personally think that this is, the measurement is always, again, what are you contributing to Beanstalk itself, and not what are you doing, elsewhere or outside of it. And Harry Smith, if I missed any bit of your question or you wanted to discuss this more, you can type in, or you're also welcome to come to stage. Okay, we have a question from John, and asks, what's the difference between the pod rate and then the temperature?
So the pod rate is the amount of outstanding pods per outstanding bean. So it's the level of debt, in particular pod debt, relative to the bean supply. The weather is the old name for the temperature. The temperature is the interest rate for lending beans to Beanstalk and receiving pods. So for every bean that you lend to Beanstalk, you receive 1 plus the temperature divided by 100 back in terms of pods.
Okay, Mr. Manifold, I believe you wanted to maybe touch on a bit. Did you want to come to stage? Not seeing in the audience, I see you now.
Yo, guys, how are you?
Quite well. How are you doing?
Good, good. 2 or 3 days with the printer back on. It's a long time coming, man. Feels
Yes.
great. Cool. So, Harry, I see all your questions. They're great questions. Thank you for answering them. So I'm just going to kind of go here a little bit one by one and just make sure I know what you're asking. So, you know, in terms of the Beanstalk contributors and Root, there is currently no relationship with those two entities. You know, the Beanstalk contributors are currently paid by the DAO, and Root's a private company that's not paying these DAO contributors. However, in the future, and if it could be another private company, hopefully, maybe Root, whatever. We hope that the Beanstalk contributors, have the flexibility to go become entrepreneurs and build Beanstalk businesses, and that's something that is welcomed by the DAO, because ultimately the contributors and myself, frankly, are people that have a high hurdle and a high opportunity cost. And so, with our time, we really want to contribute to the Beanstalk economy, and make sure that, as Publius mentioned, there's sufficient incentive alignment there. Moving on here. So BFP wants to pay Mr. Manifold 20K a month from Beanstalk for full-time work. Okay, great. So, again, just on a personal note and full disclosure to the DAO, I do not take a salary from Root. I haven't taken a salary in any of the months since the attack, like the rest of the Beanstalk contributors. So yeah, a salary from Beansprout would be really helpful for me on a personal level. Just something for me to kind of have, and not even because I need it for living expenses, but just something from a salary perspective. I have to my name. Now, if that's something that the DAO doesn't see as appropriate, that's completely fine. And, I'm happy to, take the direction of Beanstalk, maybe under a different individual, or Beansprout under a different individual, or, if Beansprout, doesn't make sense to fund by the DAO, period. However, going back to the idea of a bean economy, there's a lot that I have in my mind that I think should be built in and around Beanstalk, and that Beansprout could be a key vehicle in recruiting the talent we need, facilitating the capital relationships, and making sure that builders have sufficient resources when they come to Beanstalk and Beansprout to get started. And I think that's really valuable. For instance, today I spoke to literally a level, elite team interested in building a Bean ecosystem wallet and mobile app. And these things I think are really important, as we're all here with Beanstalk playing long-term games, and we really want to facilitate, the development of a true economy. With Terra, for instance, one of the things I give Doe lots of credit for, and, I've had a couple good friends that were at Terra, throughout, 2018 onwards, 2019 onwards. And, he was truly a leader in building an ecosystem and economy. And although, we don't agree with Terra's economic model, there's a lot to learn there. And, there's a lot to take away from that. And, they did do a lot of things right. And I think, Beansprout can be, really, a supporter in carrying out that goal. So ultimately, like, those are kind of my high level visions. Happy to go to anything else. Scrolling down here. So yes, I am a fiduciary duty to Root. That is absolutely correct. Not Beanstalk. Why does Beanstalk have to pay for a private co? So it's actually quite the opposite. Beanstalk hasn't paid anything to Root, not a penny. But Root's actually contributing, upwards to $300,000 towards funding the Halborn Rotator on behalf of Beanstalk. So, it's actually a really positive some relationship in which, we collectively with the private, entities that can be spun up, we really want to form them, as other entrepreneurs are interested in building a Beanstalk, to really, contribute and donate back to the protocol. So, again, it's this really positive sum thing. Hopefully, okay, you're still going here. So no Root salary, but you were getting Root equity. Yes, that's correct. I am getting Root equity. That is something that, I frankly don't know how much equity I'll be getting. It could be, very little. And the reason is because, again, I kind of view Root as a public goods. If you look at Uniswap Labs and what they're able to fund and recruit to their ecosystem because they have a private entity that can facilitate this, like, that's really important. If that means me having less equity at the end of the day, I'm totally fine with that. And if that means, other Beanstalk contributors getting some Root equity at the end of the day, that's completely fine too, if that's what's needed for the ecosystem to succeed. scrolling down here, if you have any other stuff, my concern here is using Beanstalk resources to fund a private venture in Root. So again, there have been 0 Beanstalk resources that have provided a penny to Root. In fact, Root has donated $300,000 to Beanstalk. Okay, I think we're at the end there, but if there are any more, let me know.
Thank you, Manifold, for taking the time. And I also wanted, to bring something back of the Beanstalk ethos, is that it wasn't long ago when no one knew anyone, and we were all individuals with pseudonyms, and it was always built around decentralization and on how the protocol itself functions. Don't see or think how disclosures is what's going to protect the protocol. You'll always want to think of the protocol itself on how can it always function and what's the best for its interests. And then the way to judge the contributors again is based on what are they contributing or what have they contributed to the protocol itself. Okay, let's get back to some questions, Publius.
Before we do though, I just want to say this is what it's all about, guys. So thank you, Harry, for asking the tough questions. I think we all appreciate it. Thank you, Mr. Manifold, for being so transparent. And if there are more questions that people have, I think this is an open environment. So let's all continue to try to put our best foot forward and have open and transparent discussions. And again, what that fine line, I think, will become clear to everyone over time. So we're all going to figure this out together. So thank you both for participating in these tricky new discussions.
Okay, back to some economics questions or questions that are in the economics channel. And this is the idea behind this is, what can we do, or how can Beanstalk somehow reduce its debt? And the thinking is, what if Beanstalk offers, a debt, a pod holder based, we're gonna burn some of your pods and then we're gonna give you fertilizer for less than that. And we understand, of course, that fertilizer is there to recapitalize the stolen funds, but let's think of we're having this to be a full-time running always. So if you have 100 pods at the line of 100 million, you get let's say one sprout or 2 sprouts. Do I make sense? And I hope I summarized also the idea well.
I think it generally makes sense. The issue is that with soil, one of the key parts of soil is that people can calculate exactly at what bean supply their pods should become due or payable or mature. And therefore, it's relatively simple calculus or a simpler calculus when calculating your return. Now you just need to calculate your risk. So what do you think the chances are over what period of time do you think until you get this return? But you know your return, and you know the exact metric that will determine when you get it. So it's the supply. Now, as soon as you start to offer additional types of debt or ways for people to adjust their debt or restructure it where they skip in the line and get some sort of preferred payment, that really compromises the integrity of the soil and pod structure. So the issuance of fertilizer was really a one-time thing that made sense given the crazy circumstances after the attack. But in general, I think to a large extent, less is more here, and keeping the mechanism relatively simple on this front and making pods very basic. The best thing to do is to ensure that there's a liquid secondary market for pods. And the more liquid the secondary market for pods, the more attractive it is to lend to Beanstalk, and therefore the larger the debt level can become, and the less risky it is for Beanstalk to be issuing debt or have outstanding debt. So improvements to the pod marketplace are something that will be more beneficial to Beanstalk than futzing with the core peg maintenance mechanism, which has demonstrated a pretty strong efficacy at attracting lenders.
Bernardine asks, and I think this is when you mentioned the hyperinflation talk. What's the podcast, or which podcast was that?
So I don't know the exact episode, to be honest. I'm opening up my Spotify right now. It's the New Austrian School of Economics podcast with a series on the formation of interest rates. And if you want to know the exact episode, I could tell you a range, but I don't know the exact episode. But it's called it's the Antal Fakete podcast, the New Austrian Economics.
Gusto asks, and it comes back to to the censorship or the sanctions that we've seen if Beanstalk Farms is to protect itself, from things such as like Netlify, GitHub, etc.
Definitely important, and there's lots of decentralized primitives and networks that are being created to serve the roles and the necessary parts of the stack, but it's not so trivial to integrate all of them into the Beanstalk stack. So definitely a priority over the next year, let's call it, to make sure that everything is implemented in an open source fashion on a totally decentralized stack. But it's a labor of love and one of major effort. So I think all of the contributors have this as a major goal, and the more contributors that are available to work with us, the better, because having a best in class, you say it, I see the comments. It's pretty trivial to switch from Netlify to a self-hosted website. It's not so trivial. Who's hosting this? So I'm not hosting it. Are you going to host it? You need it. Like it's not so simple. So at the end of the day, we need decentralized hosts, and we need decentralization at every layer of the stack.
Okay, a question from James. Is Publius or Beanstalk Farms worried about anything so far that we've seen, or from what we have seen in the past 4 days?
I mean, I'm a nervous Jew, so I worry about lots of stuff. But it's in general, it's like this has been relatively smooth sailing. I think we can expect to see some additional downside volatility here, like in general. So 97 cents is like, if that's the lowest we see, it's amazing, right? So perhaps Beanstalk really is that strong at peg maintenance. Perhaps it's a function of the incredibly low pod rate right now. But this has been an encouraging first couple of days. There's nothing that's sticking out as a major problem at the
moment. Publius, of course, and I believe everyone have been thinking on how the protocol will perform or do on Unpause. And just to think about that, in this economy, and then this what's happening with DeFi in specific as well, and then the protocol itself loses everything that it has, and comes back, and Bean is right there at peg performing as it is really nothing short of like magic or a miracle. Something that is done purely through math and smart contracts behaving as expected, or as you want it to be. I was thinking that the protocol will even go through harder times and believe it would come back, and this past 4 days have beat my expectations.
It's very exciting. It's very exciting. So we will continue, I think, collectively to all watch this thing and see what the upside and downside volatility looks like with the new A parameter and the smaller liquidity pool for the time being. But this was an encouraging couple of days with that still a little PTSD on the attack. So it's like as long as there's no major issues, I think we can call that a huge win.
Okay, I think, unless I missed a question, please remind me. But I think I came to the end of the questions at the town hall chat. wanted to comment or talk a little bit about, what happened yesterday drove, let's say, people holding USDC, and I'm not so sure if that exactly, was the trigger, but you've had an increased interest, in other decentralized stable coins. And we could see how these stable coins weren't, able to handle that demand. And the current centralized stablecoins are so big that you even have big protocols openly saying that the decision of Ethereum's fork, for example, is decided by the stablecoin holders. And then the current decentralized stablecoins can't even handle 1% of the market cap of of the big centralized ones such as USDC and so on. These are in tens of billions. The decentralized, stable coins reach to the half of that, and then you find a crunch just given the collateral that builds it. Don't you think that this is exactly what is the market cap or the cap on supply that other protocols have, and it is what Beanstalk is answering?
I think we would probably take it one step further and say that at scale, you wouldn't just expect there to be ETH trading against Beans. You'd expect there to be staked ETH trading against Beans. And assuming that Beanstalk is working at the scale of trillions of dollars, it's not unreasonable to expect that the vast majority of stETH would be within the silo. And therefore, instead of USDC or USDT getting the main votes in which chain is the winner when there's a contentious fork, I think you could make the argument that economically, if Beanstalk owned the majority of stETH, or stockholders held the majority of stETH, that whichever chain people continue to lend to Beanstalk on, or whichever chain people continue to view Beanstalk as the most credit-worthy on, or perhaps the DAO could even vote which protocol Beanstalk would honor in advance. There's a lot to be said for this is an opportunity from an economics perspective for this whole economy to actually be built in a decentralized fashion. You can, as this is what we were talking about earlier, if you have your weakest centralized, your whole system is centralized. So Beanstalk creates the economic basis for an alternate, totally decentralized system, and the goal is to help now build all sorts of tech to facilitate that, plain and simple. But the current reality that we live in, well short of, I think, everyone's expectations, and it should be. It's not good. It's not good enough. So we can do a lot better, and we hope that Beanstalk is a major part of that.
Najak asks a question, and I'm not sure if I understand it, Najak. Maybe you can answer me. And he is saying, why don't we mint more unripe beans and pay the contributors, for their unpaid work? Najak, do you mean more unripe beans for the past work, or mint unripe beans to pay for future work? I think he means for past work, so reward more. I'm not sure if you have an answer there, Publius. I guess propose it to the DAO.
Yeah, I would say that's a question for the DAO on how much is an appropriate amount to compensate everyone for the past couple of months.
Tyler B asks, is there anything that can be done to push the price of bean way above peg so it can, clear the pods faster?
Demand for beans.
So I think because maybe it also comes to some thinking of why does Beanstalk mint, and something that if we change the algorithm, maybe we will mint faster and pay off faster. And Beanstalk doesn't mint to reward; it really does the minting to bring the price to one, or to for stability, not for rewards, and not to pay off people just to pay off people.
In fact, by creating stability, Beanstalk creates utility, which should create demand for beans that allows it to pay off its debt. But by just minting beans in order to pay off the debt, that's how you create excess supply, and downside volatility that then destroys utility. So it's very important that the protocol moves slowly and steadily with the main goal quite clear.
John asks if we can give some sort of guidance for users on the website. I'm not sure I understand it. Do you mean things like tooltips or guides on how to use the website? If yes, we will want to work on how to guide. This is something that is on mind or to be done. RG asks, when is the NFT? I believe we will probably have an update by the end of this week. My understanding is that the team is testing the attributes, and I think a little bit of the rarity or on how will that happen. Then he asks, what about a Bean Frax base pool? Most probably, the next is going to be Bean ETH, and then the one after it is most probably going to be Bean LUSD. But there hasn't really been discussions on what is next.
Yeah, I mean, Frax hasn't been very interested in us, or hasn't. They haven't reciprocated any interest, and they're all backed by USDC, so it's hard to. At some point, if we're listing, if Beanstalk is whitelisting a Bean Frax pool, why not whitelist a Bean USDC pool? So if the DAO is comfortable with that level of centralization, why not just rip the whole thing and just say Bean USDC pool? So not sure what the benefit of Frax is, other than maybe they'd pay some additional rewards and subsidize it, which if that protocol wants to pay the DAO, that's fine. But it seems like a pretty low benefit pool to Beanstalk at this point.
And then the last question is when is the Beanstalk DEX? That will probably be launched with the Bean ETH pool. So probably won't put a date, but hopefully sometime soon. Okay, I think we're at the end of the questions. Maybe I have one more question, Publius, which is about Convert. And when converting from LP to Beans, there is a little bit of friction there from losing 4 seeds to 2 seeds. And like there's an opportunity cost, and you start calculating, if you think the price is enough or good enough to convert or not. I wanted to revisit a question that we've asked before, which is making the silo exclusive to LP. And it means that you enter the silo as an LP, and then once you're in, you can convert at however you want, at whatever price that you want, but you don't have an issue with seeds or losing seeds anymore. Does that make sense? And do you think that will help with conversion by removing the friction of going from 4 to 2?
Well, I think it's important to say that there is likely to be demand for just deposited beans, particularly once there's fungibility built on top of siloed assets. So you have some sort of fungible bean that's earning the silo yield. And Beanstalk should be able to support both, right? It should be able to support having straight deposited beans and then having deposited LP that is constantly being converted that's independent of the deposited beans. So there's nothing wrong with deposited beans, and while demand for deposited beans in lieu of demand for deposited LP does affect the overall liquidity to supply ratio, at the end of the day, Beanstalk should be optimizing for utility, and utility is clearly, I mean, it's up for the market to decide. Maybe over time the market decides that holding exclusively exposure to liquidity is what's desired, and there's no need for straight bean exposure. But it's from an implementation perspective, I think at the moment there's no reason to remove deposited beans. It's hard to understand the benefit.
Okay. Any concerns about the upcoming merge going from proof of work to proof of stake?
No. I think it would be a much more interesting question if there was a Bean ETH pool was the only pool, and we've talked about that previously, but at the moment, we don't expect there to be anything crazy with regards to the market.
Alex asks, people are using Silo or FERT rewards to buy back into FERT, and that causes a sell pressure and the price to go down. Is this a surprising development, or was this accounted for?
So, no one likes a Monday morning quarterback. So instead of talking about what was intended or not, I think we can just analyze the fact that the existence of FERT with a high interest rate at the moment, even though it's less than 500%, serves as both competition to demand for the silo and the field, and because it's exclusively USDC, very clearly an incentive for people to sell beans into USDC to purchase more FERT. Now, to be candid, the main concern with the ramped up minting schedule was that there would be too much demand and not enough minting, and therefore the possibility of a lot of demand to sell bean mints immediately into USDC to purchase fertilizer and yield farm, that seemed very attractive. So it's hard to say exactly about what was all of the different intentions because of the various interplays between soil and the field and silo and stock, and then the fertilizer in the barn. It's a lot of interweaving parts, but I think it's been very clear over the past couple of days that all of this stuff has been playing out in relative harmony. We did see the price go down to 97 cents, which I think we've expressed as kind of surprising on the limit of the downside. Perhaps even a lower price would have been expected. So generally pretty encouraging, and nothing has been too surprising with regards to the structure of the FERT or the market behavior to it.
RG asks, gauge on bean 3 curve. I'm assuming here, like bribing, I guess, on curve.
Maybe at some point. The reality is that the implementation of the silo that will facilitate the distribution of the yield from curve is probably still a ways away, and therefore the gauge is not a priority, at least at the moment, although it's hard to imagine the curve down not improving the gauge for the pool, so it is perhaps something to pursue in the not too distant future, but no real thoughts.
Okay, I think we're at the end of the questions. We're also 10 minutes past the hour. Publius, thank you very much for taking the time, as always, to answer all of these questions.
Thank you, Matt. This has been a very exciting couple of days, and looking forward to having, God willing, many more of these discussions with all of you.
Same here. See you next week.